We're going to see if you should be using ULTY on margin to retire early. So ULTY is a high dividend ETF from Yieldmax. And I wanted to discuss if these eye-popping dividends are actually real. So if we visit the Yieldmax website, we can see here that ULTY is paying almost 87% distribution. And let's go take a look at ULTY on the Morningstar chart. So if we look at ULTY on the Morningstar chart with a 1-year time frame, we can see the stock's down nearly 50%. Now down nearly 50%. So why would we want to own something that's going down to the right? Well, why you'd want to get into something like ULTY is for those 87% distributions. So with Morningstar, we can click on the data type and add back in the dividend. So this is what your returns would look like if you bought ULTY with the dividends added back in, with those distributions added back in to see what your total return would be. So you can see on the 1-year chart, we're up nearly 30%. And that makes sense because if we look at ULTY without the dividends, we're down nearly 50%. We're down on 49%. And then we saw at the beginning that ULTY has an almost 87% yield. So if we just use a nice round number and say it's an 80% distribution, and then we say we're down 50% in the last year, that's how when we add the distributions back in, you can see that we're up, roughly 30%. So that math checks out. I know a lot of people get confused with stuff like ULTY and about the decay, but you can see here that the math checks out. If you have an 80% yield and the stock's down 50, you're up 30%. And that's how these are still good investments. A lot of people like to bash on Yieldmax saying that they're yield traps, but if we look at the S&P on that same time frame, we're only up 15%. So we're actually beating the S&P almost double by using something like ULTY. So I started this video about if ULTY is good to use margin with, and I wanted to explain why it actually is. So if you use margin on an investment like ULTY, the benefit of doing so is when you borrow money on margin to buy assets, is you have to pay interest on that money you borrow. We'll just use a nice round number. We'll say 7.5% here, for the argument's sake. Some people are able to negotiate that interest rate lower. I have myself as well. I use E-Trade. I know Todd over there at Unconventional Wealth Ideas, he has a script that you can that he'll share with you. So if you want to get some advice on how to lower your margin interest rate, visit his YouTube channel or check out his website. But let's just use a nice round number of 7.5%. So if we assume this is a 27.5% gain, and we're paying 7.5% interest, you're still generating 20% of a return on that money that you borrowed. But even better than that, with something like ULTY, those distributions are paying that margin debt back very quickly. So you're not paying the full 7.5% on that money you borrow, because when you're 3 months down the road, now you've gotten 25% of that 80% back, and that's paying that margin debt back. So the amount that you're paying for that interest is going down as well. So that's the benefit of buying dividend paying assets with margin, is those dividends will pay that margin debt back. Whereas if you buy stocks, if you buy high flying stocks or index on margin, you're not getting those big distributions to pay that margin debt back. So you're stuck paying interest on the money you borrow. And then especially if the market grinds sideways, you have no way to pay that debt back unless you sell the stock. But the reason we want to buy stocks is we want to see returns. So that's the benefit of buying income paying assets to pay back the money that you borrow. So you can see here that you can get some good velocity with something like ULTY. Combine it with other similar funds that do similar things, and with using margin, that's how we're able to supercharge returns and live financially free from the brokerage account. There's a good community over there that Todd's gotten going on the Discord. I think there's almost 3,000 people in there, sharing their experience, and putting all your eggs in one basket or getting all your information from one place is not always a good idea. So that's why the Discord is great, because there's a lot of smart people in there sharing their ideas and their experiences. And it's led to a lot of people, living that fire lifestyle and being able to, ditch the 9 to 5 and live financially free. So I've been knowing Todd since college, and I know his old website, Wall Street Stock Solutions. He's been beating the S&P, really since he started investing. He's the one that kind of got me into investing. So his new website is the Unconventional Wealth Ideas. That's the one that has the e-guides and stuff like that. But his old website was Wall Street Stock Solutions, and he's been beating the S&P, really since college, consistently. So, he is the real deal. And we've taken our bumps and bruises, and taken some licks along the way to come up with these strategies that he shares with you guys, and that's how he's able to not only beat the S&P but also get the dividends to live financially free. And that's really the name of the game.